This morning, shares of Ford declined over 1% after Jefferies downgraded the stock to a hold, citing weakness in Model E guidance. So, what is Ford Model E? That's their electric division. Last year, they separated their gas combustibles and their EV division into two separate units because they wanted to go all in on EVs. Now, years ago, they stopped making the sedans. Now, yes, they make the Mustang EV, but that's about it. To focus on their pickups, specifically the F-150, the best-selling pickup in America for many, many years. And due to SUVs and pickups profits margins. So the CEO said in 2020 we are going all in, citing creating separate but complementary businesses that give us straight up speed and unbridled innovation in Ford Model E, together with Ford's Blues, industrial know-how, volume, and iconic brands like Bronco that startups can only dream about. Again, this was what Jim Farley said 3 years ago. But EV sales have slowed, with Cox Automotive recently warning that while EV sales records will continue to be set, the EV growth will continue to outpace overall industrial growth. The days of 75% year-over-year growth are in the rear mirror. And that's why we've seen this past year how Elon Musk and Tesla decreased their prices on their models, 4, 5, and 6 times earlier this year. Cox Automotive said hard growth days are ahead. Now, last week, Ford reported earnings, and it was a beat. However, their Model E unit lost about $4.5 billion on profits of Ford Blues rising to roughly $8 billion. So, yeah, it was an offset, but if they're going all in on EVs, it's not a good sign with much headwind ahead. So let's get to the charts, and I'm going to go right to the weekly chart where we did have weekly buys at $14. However, that did not hold for a multitude of reasons. Obviously, this was on earnings, which saw a price decline. Also, when you look at the weekly bias level that was formed, you had a rallying price, one basic candle, and a rally out. This rally out wasn't the strongest, right? Look at the volume, not on high volume. In addition, we couldn't get any follow through after the first green weekly candle, right? You had this kind of pause in price, right? Reason why I couldn't go any higher, really there wasn't enough buyers, right? And so we had this gap down on earnings a couple of weeks ago, or pre-earnings a couple of weeks ago. And you can kind of see that on the daily chart. Price gap down prior to earnings, and the momentum just continued to wean until we had a gap down on earnings last week. Now going back to the weekly chart one more time. Other reason why this wasn't the greatest weekly buy level, you didn't have a lot of profit potential, right? These dotted red lines signify monthly resistance at 16 and 1650. All right. So the question is, how far can price move down? I think Ford is a strong buy at this $10.50 support resistance band. I think it's even a greater buy if price can get to the monthly buys level at 850. Now, honestly, I don't see that happening unless we have a huge sell-off in the entire stock market, as some are predicting. but I'm not sure if that's going to happen, as some are forecasting a soft landing. We also have maybe one more hike to look forward to, and then after that, next year, you're going to see interest rates getting cut, which will be bullish for the stock market. So again, I don't know if price will get down to this 850 level, but obviously it's clearly that the momentum is to the downside at the moment, as you have RSI on the daily chart below 40. It is pretty much approaching oversold levels. You have the 100-day and 200-day simple moving average serving as dynamic support, which is why we are probably getting a bounce today, including from the massive drop from the 1540 level. So let's take this off the stock of the chart. Zoom back out to the weekly. Yeah, so right now price is range bound. It's best to play the extremes. Sell at 16, buy at 10. Those are your plays on Ford for now. Thanks for watching. Subscribe. Please like the video.